Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, April the 3rd. The year's 2019. Let's talk trading. Horizontal lines again. The buy zone. One thing about horizontal lines, it makes it easy for you to place your money in risk management. So let's make sure we do that this month. Okay, looking at some horizontal lines from the previous week's candle, you can see we broke out of that upper wick zone again. It was a nice break yesterday. Right now we're 18 pips above previous day's high and 26 pips off the low. That gave you a potential 44 pips if you nailed that trade. And we still have three pairs that haven't filled the gap. But anything could happen this week because we have NFP coming up on Friday. Now, let's take a look at the buy zone here. As you can see, yesterday we had the pivot point just above the open, so really no bias there. We still had that gap to be filled down here, but look and see what happened. You see, we closed above the weekly open and the daily open, and then all of a sudden some news came out and we had another gap to fill. Or actually, we had another gap set in, and you can see here, price tried to fill it and took off again, and now you see we're coming off of that high. So once again, right here, you see we had about what, maybe 13 pip range, and we know based on statistics the range is going to be greater than 30, right? So, or 30 or more. So right here, anybody taking that trade was rewarded with a nice 30 to 40 pip jump right off the get-go. And you can see price here is working itself back down to this area. Now, when price gaps like this, you can see here, if you just look straight across here, it's almost like if you use this as your open, you can see here what happened once again. So the neat thing about the buy zone is you can use it at any time. Because a few traders say, well, what if my broker starts its day at, an hour before or an hour after? It doesn't matter because the price still has the range. You just run the statistics for the pairs you want to trade, for the using your broker's data. And it's not going to vary that much. 1 hour, one way or the other is really not going to make that much of a difference. So you can see here, if your broker started an hour later or 2 hours later, it's really not going to make that much difference because you still would have had this range put in to the, open minus the low. And then so here, then you've got, a high minus the open. So it just really is not going to matter that much. Now, some people ask what time frame, what chart period should you place the buy zone? Well, once again, it really doesn't matter because the rule of thumb is going to be you're going to go long here and you're going to go short here. So it doesn't matter if you're looking at a 1 minute chart, a 5, a 30, or even H4. It just doesn't matter because you're still going to go long here and short here. Because remember, all these different chart periods are simple data compression of the tick chart. They compress all the ticks within a certain time frame and they make a candle. But I mean, the only true chart is the tick chart right here. And if you don't have my indicator, once again, just hit F9 and you'll see the tick chart, every trade tick by tick. So the buy zone once again proved to be profitable. So this isn't Harry hindsight, you know. This is Larry live trade because we do this every day, same thing. The daily open, 8 to 10 pips away to the buy zone, 8 to 10 pips away to the short zone. You take your trades and you see if the market pays off for you or not. And so here, you never got a short trigger. So you would have never been short. Of course, if you took the weekly open cross right here, that would have taken you short if you wanted to trade that weekly open crossover, which can be highly profitable. But you see, it was the same as the pivot point. Price went through it, started to pull back. You see, when it crossed the open right there, that should have been your signal to exit the trade. And that would have given you, about a 5 pip profit. Not too bad. Now, somebody asked me, why do I always show the euro yen? Why don't I really like show other pairs? Well, every now and then I do, but there's a reason because I want traders to realize that they can pick one pair and they can learn to trade that pair and they can be profitable. And they might be so profitable that they never switch trading that pair because they start to learn that pair. They learn what happens during certain hours of the day. And they're focused because all it would take is, I mean, think about it. If you were here and then you flipped over to some other pair and you come back here and all of a sudden you just missed out. So it's just that simple. Or maybe you were trading this pair and it was down here and then you started to look at a couple other pairs and by the time you flip back, price is up here. You'd be too late. You would have missed your opportunity. So that's one of the reasons why I trade one pair day after day after day. And that's why I show you the same pair day after day after day. You're free to go, look if you want to look at what other pairs do to, try the buy zone on it or try some of the other methods, run frequency distributions on them. But I would suggest you find one pair and trade it well. It's like juggling. You'd learn to juggle one ball, and because then you learn to juggle two, and then you juggle three, and that's how you learn how to juggle. Well, with trading, you need to learn how to trade because there's so many things that you're going to have to learn to be consistent on. And so by taking away one variable, which if you trade the euro yen one day and the pound dollar one day and the Aussie Swiss franc another day, then you come down, trade the dollar Canadian, then you trade the New Zealand Canadian. I mean, you're going to be all over the place. There's no reason for chasing because every day these pairs will give you an opportunity. Why? Because they range. And the range is what you're exploiting using the buy zone. And you can see here, we hit that yearly open but didn't close above it, but price is trying to come back. On the monthly, you see we opened above the monthly open of February. And once again, we tried to get above January, didn't make it. And then looking at the range, like I said, we have a range here of 84 pips. Buy zone is 20 pips. There's 60 pips that you could have exploited using this method. Once again, horizontal lines the previous day, we shot above it. Right now, 32 pips above it. 24 pips off the daily high. right through the previous day's wick zone. We covered the pivot, but now we've got a missed pivot here and a missed pivot here. You can see here, we dipped in that wick zone and shot right out, and it just gapped right up, just hopped right through this wick zone, just gapped right above it. And looking here at the tick chart, you can see here, bid crossed above the valley of the ask, and it's just pretty much, we had some pullback here, but it did it again. Nice little move here. But let me show you one other thing about the buy zone. People asked what time frame to trade. Well, if you notice, let's see which. No, I don't want that one. I want this one. Right here, we've been looking at the frequency distribution. This is the daily. But if you switch over to the 1 hour frequency distribution, you can see here 0 to 9, about 30% of the time. So that means 70% of the time, euro yen is going to have a range of 10 or more. So we go back. Oh, wrong chart. We go back to the buy zone. Oh, I think I messed up the recording right there. So I'm not sure if we caught this or not. Frequency distribution, H1, hourly candle. It's going to be less than 10 pips, about 30% of the time. So it's going to be more than 10 pips, about 70% of the time. So coming back to the buy zone, if we know that here we have a new candle that opened in the buy zone. There's a good chance this candle could be 10 pips or more, so it's going to move forward. Once again, we enter the buy zone, especially on a new candle. We know 10 pips or more, we've got an opportunity. But if the candle's already ranged 10 pips or more, like in this case, you know, that you're going to probably have to wait for the next candle. You could ride it out. You know it's going to be 10 pips or more. And so sometimes it's going to be 20 or 30 or even more. So that gives you confidence to enter the trade, and you can see what happens. So if you use the 1 minute or 5 minute, the range isn't going to be that much, and you're not going to be able to take advantage of that price movement on that candle. But if you can sit here and trade the hour candle, you know, looking at the hourly range, you go, okay, I put my trade on, I can wait for an hour and see what happens. Of course, if it goes against you, you've got your money and risk management in place and you'll stop out. But if it goes for you, sometimes you can get really lucky like that. So the thing to remember is when you're looking, when you have a particular chart period that you're displaying, you know what these frequency distributions of the range for this time frame. You need to know that if you want to trade and trade profitably. So that's it for today on the buy zone. Just remember, it's not what you trade, it's how you trade it. So get out there and drain the banks.